TD Cowen surveying 2,000 Chinese customers to see how they feel about popular American brands like Apple and Nike and Lululemon and Starbucks as trade tensions rise. Joining us right now with more on the report is John Kernan. He is the TD Cowen retail analyst. Tell us about the brand that is America. We heard earlier from Ken Griffin this week. He said that he's nervous about what's happening to the brand that is America.
Hey, good morning, Andrew. Thanks for having us. Look, our proprietary survey partnered with a Beijing-based advisory who conducted in-person interviews of 2,000 consumers across a cohort of ages, income levels across Tier 1, Tier 2, and Tier 3 cities. 28% of the respondents found Western brands less appealing. That's up from 25% last year. And the greatest increases came from high-income consumers and 18 to 34-year-old consumers. That spells trouble for a lot of American brands operating in China.
In terms of, we were talking about Apple today and this whole idea that they're going to move some of their manufacturing, maybe all of the manufacturing of the phone that gets imported to the U.S. out of China into India. What do you think that's going to mean for the way the Chinese consumer feels about Apple, to the extent you think it matters?
Yeah, sure. Apple does not fall under my coverage, but certainly we published quite a bit of survey data on it. And look, Apple faces tremendous competition like all other Western brands operating in China. What we saw in the survey was the Western and American brands were losing share to local-based China competition, and that's across pretty much all categories. So the market in China is getting much more competitive with Chinese local brands. And again, the survey reinforced, because we have the results from last year, that increasingly negative views towards many American brands.
What brands, are there American brands you think that will hold up better?
Yes, sure. There definitely were some positive standouts in the survey. The Western brands that showed improvement in brand preference or favorability ratings with Chinese consumers were Lululemon, Ralph Lauren, Hoka, and On. Those are within my sector. But we would note that these improvements were relatively small, and those companies have relatively small share. Nike still remains #1 share across all their key categories, but they lost preference share pretty much across the board, and all of it was donated to local China-based competition.
In terms of Starbucks and McDonald's, what happens there?
Our restaurant analyst, Andrew Charles, covers those companies. Look, they face the same dynamic. There's increasing competition. There's also a very deteriorating macro environment. Our survey points out not just brand preference and views towards American brands. It really dove into consumer confidence, consumer spending intentions, and the consumers' views on housing prices. Most of China's wealth is tied up in the housing market, and over 42% of consumers in China expect the housing market to decline further this year. That's on top of last year's 9% decline. And if you look at global housing corrections over time, not necessarily in China, but all over, they're drawn out processes. So the China housing market probably has more downside. There's a lot of wealth tied up into that. That's going to affect the macro. China consumer confidence is at 30-year lows. It's also declining year over year pretty significantly. So the mood in China among the consumer is negative, whether it's young, old, high income, low income. Folks are very cautious. It's going to affect Starbucks. It's going to affect McDonald's and pretty much everything across the consumer discretionary space.